Hey everyone, welcome to Zaki Crypto Update, your go-to channel for the latest in blockchain trends and market insights. I'm Zaki, and today we're cutting straight to the chase to explain why Pi is on a wild ride after a sudden 25% jump. But before we get into the meat of the analysis, a quick disclaimer: this content is for informational purposes only and should not be considered financial advice. Always do your own research before investing. Over the past few weeks, many of you watching have seen Pi's price drop to new lows. It's been a period of painful red candles and steady declines, with the coin barely maintaining traction. And then, out of nowhere, today in a matter of hours, Pi soared over 25%, smashing past the 75-cent mark. For anyone tracking these movements, that kind of leap isn't just surprising, it's a total game changer. Let's break down what happened. After weeks of selling pressure, investors were starting to wonder if the worst had been seen. And today's spike is giving many a glimmer of hope. It's the kind of move that tells us even in a down market, sentiment can rapidly pivot when the right catalysts emerge. One of the major factors behind this surge is the renewed focus on real-world usage. Recently, headlines have re-emerged about businesses that are actually accepting Pi as a payment option. For instance, a Korean skincare company has started allowing Pi for purchases once again, an essential nod that Pi isn't just another digital token, but a utility currency stepping out of the shadows of mere speculation. Additionally, Florida-based Zito Realty has been in the news for integrating Pi into their payment system since last month. While these names might not be household names in the broader crypto space, they are notable because they represent tangible products and services accepting Pi. And in an industry where critics often label certain tokens as pointless, having actual companies participate signals that the coin still holds real value. This re-engagement in real-world use is key. It's sending a clear message to investors that Pi is evolving beyond just hype, and that utility, however small by traditional standards, can have a massive impact on sentiment. It makes you realize that sometimes, the practical adoption of a crypto asset is all it takes to rekindle interest after a period of decline. Now, let's talk about what might be the single biggest driver behind the spike, the Banxa effect. Earlier this week, Pi made its debut on Banxa's fiat on-ramp platform. It means you can now buy Pi directly using your hard-earned dollars, without having to jump through hoops. This kind of easier accessibility always helps a coin gain visibility, but in this instance, it played a massive role. Not only did Banxa list Pi, but reports indicate that Banxa itself purchased over $30 million worth of Pi tokens. That's a tremendous show of institutional confidence. And if that wasn't enough, within the first 2 days, over 1.2 million Pi tokens were snapped up by everyday users. This double whammy of institutional involvement and strong community purchasing power created a ripple effect that's hard to ignore. As investors see a platform like Banxa putting real capital behind Pi, the psychological boost is immense. It reinforces the idea that Pi's potential is being recognized at multiple levels, from industry giants to daily crypto enthusiasts. Let's zoom out a bit. Remember, crypto isn't an island, it's deeply influenced by the broader market mood. This week, we saw a noticeable shift in the general sentiment within the crypto markets. With Donald Trump's decision to pause the next round of tariffs, risk assets got some much-needed breathing room. When other major coins like Bitcoin started to bounce back, Pi, which had been hammered hard, was in the perfect position to take off. Sometimes, after a prolonged slump, even a small uptick in market confidence can have outsized effects. When a coin falls from nearly $3 to below 60 cents, there's simply not much supply left for sellers to flood the market with, and any positive news or sentiment can easily tip the balance. The recent surge might partly be attributed to the natural exhaustion of a prolonged sell-off. Investors who had almost given up were suddenly invigorated by a sign that a turnaround might be on the horizon. While the market was shifting, there was another quiet development that's worth noting. The Pi core team has largely maintained a low profile on social media recently, but they did drop an important update on their blog regarding the Pi ad network. Now, what does this mean for Pi? Essentially, this program is designed to incentivize real-world usage by letting developers earn Pi through advertisements in their apps. In return, they can showcase and distribute Pi tokens. Although this update might have flown under the radar for many, it signals a mature phase of platform development. When a network starts to build out a functional ecosystem, where tokens have utility beyond simple trading, it lays the groundwork for sustained growth. Developers will be motivated to build more apps, advertisers will eventually start spending on Pi, and the overall economy around Pi could see significant improvements. This kind of ecosystem development is the antidote to the criticism that Pi was built on nothing but hope and hype. It's a real push towards integrating into everyday business operations, which can drive additional demand and add an extra layer of resilience to the coin's price. Now, I'm sure many of you are asking, is this just a temporary spike, or can we expect a real recovery for Pi? The honest answer is, it's too early to say definitively. Despite today's impressive jump, Pi is still down over 74% from its all-time high and a staggering 53% decline just last month. The project continues to face challenges such as a high token unlock rate and the absence of major exchange listings. However, what sets today apart from past attempts at recovery is that this rally came with volume and strong catalysts, both in the form of institutional backing from Banxa and genuine real-world usage being acknowledged. This combination could be a harbinger of more sustained momentum if it manages to hold above the current level. While it's critical not to get carried away by temporary market euphoria, the fact that there's renewed interest in Pi, both from institutional players and the broader crypto community, suggests that we might be on the brink of something more substantial. Of course, if this rally turns out to be fleeting, there might be more pain ahead for holders, but for now, it seems like a positive sign in a challenging market. Bringing it all together, today's surge in Pi isn't a fluke. It's the result of multiple converging factors: renewed real-world utility signals, strong institutional moves like Banxa's hefty investments, an overall lift in the crypto market sentiment, and a quiet yet meaningful nod from the Pi core team towards developing a robust ecosystem through the ad network. This multifaceted catalyst effect shows how both micro and macro-level factors can suddenly realign the market dynamics of a digital asset. It's a potent reminder of how volatile and yet how opportunistic the crypto market can be, especially when you combine user sentiment with genuine developments on the ground. While Pi's future remains uncertain and risks remain, as always, in the crypto sphere, today's performance has definitely sparked hope among holders. It's a call to keep an eye on not just price movements but on the underlying fundamentals and strategic partnerships that really drive long-term value. Before wrapping up, I want to personally encourage all of you to become active in our community discussions. Join my Telegram group where we talk crypto, share free airdrop alerts, and keep each other updated on the latest trends and opportunities in the market. It's a great place to swap ideas, ask questions, and stay ahead of the curve. Don't forget to hit that subscribe button and like this video if you found the breakdown helpful. On our channel not only helps us reach more crypto enthusiasts but also makes sure you're always in the loop for the next big move. Quick reminder, all the information shared in this video is for informational purposes only. I'm not a licensed financial advisor, and nothing said here should be taken as financial or investment advice. The crypto markets are highly volatile, and you should never invest money you cannot afford to lose. Always consult with a professional financial advisor before making any investment decisions. That's it for today's update on Pi's dramatic 25% surge. Thanks for tuning in to Zaki Crypto Update, where we aim to bring you straight to the point analyses and cutting-edge insights into the world of crypto. Stay sharp, stay curious, and as always, happy trading. Until next time, this is Zaki signing off. See you in the next video. Don't forget to join our Telegram community for more crypto insights and free airdrop alerts.